Underground, overground, wombling free. Wombles of Wimbledon, coming are we. Well, hello. I'm going to update the swing trade I started yesterday. And who knows, might put another trade on. A warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the overgrown child that is the Scruffy trader. What I'm trying to do is kind of put trading in the real world. Maybe show you a trick or two along the way. So if that sounds good, please smash the like button, click the little subscribe, genuinely helps, and we'll crack on. So what am I cracking on today? Ooh, talking of things I want to crack on to.
How does your missus put up with you? Must be my legendary prowess as a lover.
Hello, my love. Would I like a coffee? Oh, that's very kind of you. Why, you being so nice? You were horrible this morning.
No.
Do you know what she did this morning? We often do like little quips when we go for our breakfast. She was insulting me, calling me the fat controller.
You have caused confusion and delay, and terrible trouble to my trousers.
Oh, that's disgusting.
I mean,
Why did I do that?
because you're horrid.
What did you call me?
Well, you are Windy Willer.
Millie.
Well, Windy Miller as well. Trust me, she might look all air and graces, but she's a proper girl. Sorry. Oh dear. I know I clown around a bit, and if you saw yesterday's video on mindset, there's good reason behind it. It's all about keeping yourself focused, and for me it is humor and music and things like that, because if you're staring at the screens constantly, you can oversee things. You'll definitely overtrade, but it kind of puts you into a mindset of fear, because you fear of missing out. You're fearful because you're watching your P&L swing wildly. And I was trying to get that across, as well as kind of poking a bit of fun into some of the strange people of this world. And I don't understand people. I might be 51 years old, but I still have a childlike wonder of the world. And if I don't like something, I just don't watch it. I'm kind of grown up that way. Oh, but I watch her all the time. I do.
You dirty old man.
Sorry. Basically, I think what I'm trying to say is just enjoy your life. And if you don't enjoy your life, change it. You don't need to be a multi-millionaire to be happy. In fact, the happiest people I know have sod all. But why they're happy? Because they enjoy their life. They genuinely do. So, anyway, stop rambling there, big boy. And let us have a little bit of monkey business on the charts. So what am I looking at? Why am I looking at the CAD JPY? And what happened with the trade that I did yesterday? Well, if you look at sort of the monkey mindset that I did yesterday, it was yesterday's video, you'll see that I set up this particular trade here. And I said it would take a couple of days to play out, and it is now ticking along very nicely. It's came into the zone, it's coming out the zone, and as you can see, the P&L is doing very well. Now, when I look at something as a swing trade, and I expect it to run a couple of days, I don't do the bouncing thing where I'm bouncing money in and out of them. It's just because they're a gentler market and they just kind of grind along. So I just leave them to get on with it. And I'll explain that when I show you my sheet. So as you can see, check yesterday's video out. You'll see this exact setup, how it was made, why I took it. And there's the results running there. So even if I don't do anything today, I am pretty well paid, because there's the first target. That'll do a couple £100. Probably hit that today. There is the second target on there, which is 272. I will be risk-free when this one closes out, and then I'm just going to see if it will hold up to that point there. So this particular one trade could see me for the rest of the week. So I don't actually need to day trade or do anything. That will look after me. But I like the charts and I like the challenge. So that's where this came from. Now, earlier this morning, I shall show you, I pulled up this sheet, but I also, just bear with me a second while I switch it on. I keep an eye on this every day, but every morning, as you can see, there's the trade there, telling the guys it's 23 minutes past 10 this morning, that the trade is in the station. It's now 11:15. However, I actually called this out originally down in the strengths. So that is the same sheet I'm going to talk through here. 5 to 8 this morning, and the strengths went up at 7:15 this morning. So this is well in advance of what I'm talking about right now. And as you can see, I do it every morning for them. And we have a little bit of a chat, and this bit here is a bit of a sing-song. Beer o'clock, 11 o'clock in the morning. Bloody hell, he's a bit keen, isn't he? Good boy. He's allowed, actually. He lives on the other side of the planet, so my dinner time is his night time. But what's all that got to do with a slice of bread? Basically, it's just kind of backing up what I say. It's all well and good looking at a chart retrospectively. I prefer to do it well in advance and kind of putting my head on the block, you know, because if I get it wrong, they knew about this 2 or 3 hours before I took the trade. So there you go. It's easy to point the trade out after it's happened. It's a little bit harder beforehand. So how did I get down to a CAD JPY? How do I filter everything down? Well, there's numerous ways it can be done. Now, I do it through strengths and movement, and it's what this sheet is. So it's created over a couple of days. It's telling me the CAD's the strongest, so that's giving me the base. It's telling me what I want to look at and have something move against it. And that's the weakest, which is pulled out these two here. And you can see that because they're red. This is green, top of the tree, bottom of the tree. Simple stuff. This is telling me the rate of change, or the change of strength over the last number of days. And I can see the CAD is increasing and the JPY is decreasing. But when I look here, the JPY is second in the list. So why didn't I look at the CAD US? 2 reasons. When I looked at the chart, the CAD US is at kind of all-time lows. But when it's down that far, it's the same as when it's at an all-time high. You're not really sure if it can still push. And because you're unsure, you kind of just watch it, sit on the sidelines. But also, when I look at the change, they are closer together than what that is. So there's a big movement between those two. So that makes that attractive. Okay, so it made it a better choice. Cable and pound JPY is next on the list. Why didn't I look at them? It's because the pound is kind of neutral at the moment. It's not really doing anything on the strengths and changes. So I'm just going to sit on the fence with that one also. But it just means it's on a watch list and I can look at it tomorrow. And then you come down onto the Swissy US JPY. Why are these not on the radar? It's because they're all in the red. So it's filtered it all out. Nice and simple. So I'm left with one pair. And this is what kind of makes me consistent. I filter everything down into what is the best candidate, and then once I've filtered it down, I'll then wait till it comes to the right time to trade it. And that's where my zones come in. I don't like trading too much outside of a zone unless I can see it's moving from the zone. That there has to be certain criteria, and I kind of scale them. A1 trades, A2 trades, A3 trades. In other words, are all the boxes ticked? So if I look across here, I can see it's a CAD JPY, and it'll move about 55 pips a day. So it's borderline day trade. Okay. Now if it's in the mauve, I take a look at the 4-hour chart. All right, it's kind of a swing trade, and almost kind of expecting it to run overnight, similar to this one. So let's move this out. Daily. If I am on what I call a swing trade, I automatically only go with the dominant trend. If it is a fast trade, day trade like cable or the DAX, I am neutral. I'll go either way. But when it's a slowing market, because the way they just grind along, I always go with the dominant trend. And as you can see, it is up. It is pushed up. It's hardly come back. It's pushed up. Yeah, came down, and then it's continued. Now that's actually a good thing to look at. Excuse me. Because you often hear all the educators and they go on about their fancy words about higher highs, lower lows, all this sort of stuff. It doesn't always work. That is a clear uptrend. But yeah, that's a higher high. You could say that's a lower low. But then what's this here? But in the grand scheme of things, it's out of sync, because it is just looking at it going up. So I don't really take any notice of that. I look at the bigger, broader picture, and the bigger, broader picture here is it's up basically. That to me is just a range and a rest. It's the only way you can kind of look at it. If it works for you, result. But for me, I just simplify everything and make everything a binary question. Is it up? Yes or no? And it's as simple as that. So when I look at this current leg, is that up? Yes. So that is my direction. Up. Because if I put any indicator onto this, whether it's a 20 moving average or whatever, that is definitely going to be on the upside of it. And I can just see it, so I know. So that's the daily, which gives me a bias to the upside. What about this? Well, similar sort of story. It's still going up. It is kind of slowing down, but I would still say that angle is quite decently moving up. It's rolled over. It's coming into this level here. So it's like a bus station, if you like, a train station. And it is slowing down. So I can drop it to an entry, which is here. And you can see it's moved up. It's come down into there. So how do I make a play on it? It's very simple. You let the price come to you. So you count a couple of candles back. 1, 2, 3. Well, there's an entry there. Top of that body and the top of that tail. Well out the noise. The market has to continue up in order to take me in. It's on an hour, so I've got plenty of time to breathe and let it do its thing. And then I can just put some stage targets in all the way up into this green zone. Simple stuff. And that is what trading is in a nutshell. Simple stuff. You try to overcomplicate it, you get yourself into a muddle. When you get yourself into a muddle, you get confused. When you get confused, you can't see what you're doing. When you can't see what you're doing, you get angry. So your emotions kick in and you'll make the wrong choice. and that's it. But stripping it all down, working out what market you're going to take, then work out what direction that market is going in, then work out where your entry is. Systematically work your way through it, and you'll find trading becomes a whole lot cleaner and easier. And as the other trade is showing you, this is an hourly chart entry. It's paying incredibly well. I bet you that's outperforming day trading, trying to get in and out for a few ticks on a 5-minute chart. And I spent 20 minutes on that, if that. So 20 minutes just waiting, having a look at it. In fact, I bet you it wasn't even 20 minutes. It was probably about 10. Just making my mind up. Paid me very well. It's just a gentle, easy way to trade, guys. And it's a nice way to trade. So what I'm going to do is, it's 20 past 11 now. I'm going to wait till about 12 o'clock. I want to see this candle close. And then I'll make a decision to go into the markets. And what I'll do is, I'll put my orders in. You kind of know how I do them. It'll be above there. Stage, stage, stage. So I'll run the trade. And then I'll come back to you at the end and I'll give you a summary. Okay.
Well, we're waiting.
Alright, so we'll come back. It's now 12:15 and it's showing decent signs. So what I'm going to do is a candle count. 1, 2, 3, 4, 5. Because it's on a 15-minute chart, which gives me an entry on the top of here. So that's exactly what we're going to do. So I'm going to put 2 orders here to run it up. Nice and simple. Bear with me. Just drop that one there. Fire. I'll adjust the targets in just a second. Oop, went in a bit quicker than I thought. But hey ho, that's the name of the game. Right. So I'm going to leave it on a 15-minute countdown. So that one is there. I don't think it's going to get up there today. So what we're going to do is we're going to just kind of let it run up. Maybe it's 20 pips to there. And we're going to leave that one just on there. Now this particular trade, because it is relatively slow, it's a slower paced market, I'm just going to let it run, grind its way up. I'm not going to try and bounce it or anything, because as you can see with these here, the ranges aren't that good. It's not like the DAX where in 5 minutes it'll rattle sort of 20 pips. It takes it a good hour or so to move that far. In fact, if I go out to the hourly, just to give you a little bit of an indication as to what I'm talking about. If you pull up your average true range, see in an hour it does 11 pips. So it's very difficult to bounce that, because if I bounce it, I'm having to wait another hour, and bounce it, wait another hour. The DAX is like 20 pips every hour. So it can move quite quickly. In fact, it's more than that. It's nearer 30. But what I'm driving at is, if it's a low ATR on the hourly, it's going to take ages. So it's a case of picking the right sort of tools for the right job. And with this one, it's a case of just let it grind its way up. Now, there are other ways I can do this. I could put a third order in, which actually I think we will, because I think the signs are there. So we're going to put the third order in, just there. Still gives me plenty of maneuverability if I need to add in because I'm not at full position yet. And what's the third order do? Well, I've got one there, I've got one there. Let's just put it halfway. So it's take profit 1, take profit 2 will be risk free past the first one, and then just let it run up. And we'll just let it play out, see what happens. Either win or it'll lose. And this one is still just chugging along ever so nicely. So happy days, all right? And that's why I've put the third position on, because all of this is essentially already paid for by that. So I can take that one out the equation, pays my salary. These two here pay for any potential losses in this, and it lets me play out. And if it goes against me, I can enter the market down here. I can enter the market again down here. If it gets under here, I am wrong. And the distance between there and the top bit is roughly 1 to 1. So my risk reward's in check as well. Quite happy. So I'll just let it play out, guys, and I'll see you at the end. Okay, guys, coming on for 5 o'clock, so I'm pretty much going to call it a day. The other trade that I started yesterday, I've cashed it out. Reason being, it was starting to form on the 4 hour, an inverted hammer, and it hadn't made any attempt to move any higher up during the day. Also, my sheet showed it had slowed down. So I put a pointer in the sand and decided to kill it. It's cashed out, paid me $3.36 for the day. So I'm quite happy with that. And this is the same sort of criteria. It's going to run overnight. It looks pretty bad at the minute because it's sitting on quite a bit of heat. But when you swing trading, that's just to be expected. You normally have a wider stop loss, but as you can see, my zone is quite deep into this trading arena, so it's come down. It hasn't broken the zone, so I'm not really worried at all. I've also banked enough that if this goes catastrophically wrong, it's hardly going to hurt me at all. There's my targets, which it may well pick up overnight into tomorrow. If it crashes into them, great. If not, I'll just look at it tomorrow and manage it out. Simple stuff. So it's been a good day. Quite pleased with the results. But ultimately, there's no point being a hero when you're trading. You know, it's great to say, oh, I've had thousands and thousands of pips. Does it really matter? As long as you're being paid. You know, if you can afford to do £1,000 a pip, would it not be safer to just do 2 pips a day? I mean, that's how some of the big boys do. Literally, get in, 2 pips a day, there's your 2 grand. Do you really want to sit on a lot of heat? Because let's be honest, if you watch what I do, it normally will go 4 or 5 pips pretty much straight away. Why not? But not a lot of us have accounts that size. It was just to give you a bit of food for thought as to different ways of doing things. Anyway, what am I looking at here? Well, I'm gonna diddle off to bed after I finished the sort of tea and everything like that, and I won't look at this till in the morning because there's no point fretting about it. So I don't look at it on my phone or anything like that. And why is that? Because I have a stop in place that is in a logical, safe place, and I have targets that are in place, and the risk reward from them both balances out. So I have nothing to worry about. Again, simple stuff, guys. I keep saying it, and I hope it starts sinking in. Trading is not difficult. It really isn't. In fact, the more simple you have it, the easier it becomes. And it's the age-old thing. If you look at your trade and you are frightened of it, your position size is too big. And it's that simple. If you can't be at peace with what you're going to lose, you can't really be at peace with what you're going to win either. And I know that sounds a little odd, but what I mean by that statement is, if you see money on the table, you'll snatch at it and you'll grab it, rather than letting the trade run out to its full potential. Now, you should have anchor points within your trade as to where you check, which is kind of what you saw me do today. I put a dotted line in, and as soon as it tagged that dotted line, first rule is take so much off the table. So I closed a couple of the positions off. Soon as it came underneath that dotted line, just get out. Make a choice, see what's happening, and if you think it's going to continue to come on you, just get out. Because what you can always do is enter the market again. If you think you're wrong and you should have stayed in, you can just put your trade back in. What have you lost? A few pips? That's it. That's if you think you're right. If you're unsure, just leave it alone. I often will take a trade out of the equation, but then I'll put a pending order in the exact same place the other one entered, and then forget about it. Because if it comes back and tags it back in, well, I've just got another bite of the cherry, really. And if I was wrong, it was going to the same stop anyway, but I've already been paid in the middle of all of this. So it's kind of trade management, shall we call it, or stupidity if it's me. Anyway, call it a day. I'll weave this into the videos over the next couple of days so you can see a swing trade play out. But you've just seen one over the course of sort of a couple of days. Paid me very well, and it was just easy peasy. So, have yourselves a good time, guys. If you're stuck, by all means contact me. Very easy found. All my contact details are in the description below. And as always, do what you love and the money will follow. See you all in the next one.